You can master a session bias without having a daily bias if you use this indicator correctly. So what we're first looking for is a higher time frame fair value gap. You can see over here. So here price is tapped in on NQ. This is the 1 minute time frame. We've tapped into a 15-minute fair value gap and we've had a very, very strong rejection over here. So what you're looking for, number one, is a wick rejection to the downside. That is important because when we go to the order flow ATAS platform, what we can see over here as price has given us a significant dry up of the volume. In fact, when we go to the top of this candle, we can see more aggressive buyers and sellers. 26 for 2, which means that there's 26 aggressive buyers and there's only 2 aggressive sellers. Now from here, when we go back to the regular candlestick chart, we're going to be understanding how price behaves in terms of this inefficiency over here. So I'm always marking out one candle before the fair value gap. Now from here, we see price breaking through this fair value gap and we see price retesting this fair value gap over here. Now, what makes this trade valid to take is when we go to the overall order flow footprint charts, what we can see is we see a lot of aggressive buyers over here. In fact, we see 1 for 4, which means that there's 4 aggressive sellers. Sorry, 4 aggressive buyers, and there's only 1 aggressive seller. Despite that, the market is able to move to the downside, and we have some big sellers stepping in here, some big sellers stepping in here, despite having a green candle over here. So when we go back to the regular candlestick chart, what we can see, what we can conclude from here is that sellers are very much active in this area. Price is wicked here and unable to break this area. So the aggressive buyers have failed. When we go back to the regular candlestick chart, we can see despite having a red candle over here, there were actually aggressive buyers within this region. To be precise, it was 9 for 53. So there were 53 buyers and there were only 9 sellers. Despite that, the market was unable to break to the upside. This is what gives us our indication to take shorts from this area, and we can comfortably keep our stop loss just above this particular area. From here now, once that's in place, we can simply target the 10 a.m. Eastern open time as a rough time to be trading from. Now, if you want to learn how to use order flow and find the exact trades, it's important to use this in your session and daily bias. Just comment the word ATAS, ATAS, and I'll send you this indicator I use exactly for free.